Apple's annual shareholder meeting is set to kick off at the top of the hour. The stock is now back above correction level, still a little bit below $300 a share because of this morning's rally. Tom Forte from D.A. Davidson and Citi's Jim Suva join us now. Guys, good morning.
Good morning.
Good morning.
Tom, when you look at where Apple is now and how it has performed during these concerns about COVID-19, the coronavirus, both on the demand and supply side, what have we learned about both how it holds up under these conditions as a stock and where you think Apple's headed?
Sure. So I think that Apple has actually held up very well, and I think that's on the assumption that the coronavirus is more of an epidemic than a pandemic, and that the risk to Apple is weak sales to Chinese consumers, which was 17% of their sales in the last fiscal year, and then supply chain disruption for the iPhone. But the big question for the market as it pertains to Apple is, does the coronavirus become a pandemic? And then the risk is much greater, including sales softness on a global basis.
Jim, as you look at the scenarios for Apple as the whole world tries to get this coronavirus contained, what are the key points? How important are developer conferences to building up both investor and ecosystem demand for a coming iPhone? How important are those launch events to doing that as well? Do you think Apple does those things differently? Is it a problem if they do?
Well, it's a very smart and complicated question, and let me answer it in two parts. First, you asked about the developers coming together. We're very fortunate in today's technological world of you don't always have to be there in person. You can develop code, software, and do conference calls and meetings virtually, which make it so that this is not as harsh of an item that may have happened a couple decades ago. Now, you also asked, importantly, about what are the key identifying factors we're watching. It's actually quite clear. You look and do the research, and you simply see that Apple stores are starting to reopen in China. They have over 40 stores there, and they were closed, and now over half of them, that's right, over 50% of them are now reopened. Now, they may not be seeing the amount of foot traffic and the long hours as normal, but we're seeing that their stores are opening, and the suppliers, whether it be Amphenol or Jabil, are having workers come back to work. And some of those metrics are Amphenol has seen over 60% of its workers come back, and Jabil has seen over 70% of its workers come back. These are positive indications that in the heart of where the issues are, it's potentially getting better and not worse. And that's why we're sticking with our buy rating here.
Although, Jim, you mentioned Jabil, it's a good example because they actually did give us a run rate on capacity, but that's something that we're not really getting at scale. We're getting people on the roads, we're getting people at work, but we're not getting production rates really as a reliable metric.
You're exactly right. But at least when we hear of numbers above 50%, and you're running your utilization or your workers back 50%, it's a positive indication. You know, if the numbers were our factories are still closed and we're assessing the situation and they're still closed and no hours of opens for stores and manufacturing, that would be absolutely bad, terrible. But the workers are slowly coming back. Now, it's not 100%, but the media is making this very sensationalized as if it's completely closed. But again, we're seeing the supply chain come back to work gradually. And keep in mind, in China,
Jim,
you don't have labor.
You are the media at the moment.
That's true. And we're saying that, you know, while we do feel for the people who are infected, and it is quite sad, simply put, there are resolutions where it's getting better. And we are seeing that the factory workers are coming back. And in the United States, there's things like labor unions and labor laws where people will picket and not want to work as much overtime. In China, the exact opposite is a lot of the people in China would actually appreciate additional work hours to earn more money. So those rates of people coming back are actually going to continue to improve, we believe, and therefore make the situation resolved. And this be more of a near-term March quarter impact rather than a prolonged structural shift That's why we're keeping our buy rating and $375 target price on Apple.